Hey, good afternoon, everyone. This is Trader Tim from over at eminimind.com. Today is Friday, the 21st of May. I'm actually doing a market analysis video. Next Monday afternoon, I won't have much time after trading, so wanted to do a little recap from this week and talk about what we have potentially going into next week. Um, Not a lot has changed since where we were last week. You can see the bounce in the ES from last week, and then this week we sold off and we're back where we were last week on the 14th. So, that being said, if we go over to look at the top four indices, SPY or the S&P has broke its 61.8. We knew that coming into the week because it broke last Friday. But if we look at the Dow and the other three holding its 61.8, the Nasdaq as well put on so we're at the full halfway back. We've double bounced at or double bottomed at the halfway back long, but also traded now again or traded. Let me delete this and show you exactly how we did it here. High to low. That was where we put on the first hedge, um, buying puts on the Qs at 334s, took that down to the halfway back long. I drew up the next one from high to low. I chose not to put a hedge on here. Instead, I waited for the full halfway back here and put a little hedge on Thursday at the close. So we'll see if we get another rollover. If we bounce on like Monday or Tuesday and break above the 61.8, then I would just close out that hedge. But this one back here from the 7th was a pretty hefty little down move, so we have plenty of I guess hedge gains to play with here. And by and large, the hedge doesn't cost very much. Buying some puts on a position that's you know hundreds of thousands of dollars. So buying some puts in the expectation that if we do go down, we have just a way to capitalize on the down move without having to close out of the larger position. And then the last one, the Russell, same thing, not quite a double bottom, actually put in a higher low on the sell-off day, but also trading it halfway back short. The other thing I'll mention that I talk about a lot. So if you're if you're looking to build a long-term portfolio, especially if you're on the younger side, I know there's a lot of you that are already retired and you're just sort of trading for some additional income in retirement. But if you are younger, it is much more advantageous to buy something like the Vanguard VUG fund, which is a growth fund and encompasses a lot of the heavily traded stocks like Apple, Amazon, Tesla. And so, in doing this, by continuing to buy pullbacks in VUG, you get the benefit of owning something like Tesla without having the risk of, Tesla going from 900 down to 600. Um, and so while it is part of that fund, it does not pull the entire fund down because it's just a small piece. So throughout, really since 2008, I've been building my position in VUG. And so when I talk about hedging, this is what I'm hedging. I have a long position here that I'm continually buying every single month, or by and large on these pullbacks, and then when the market does look like it's going to go down, I can then put on a hedge, and that allows me to make a little bit of money without, like I said, having to close out of the position entirely. So if we, Bitcoin has been in the news this last week. It has dropped and since that point rallied quite a bit. But you can see, go out to a weekly chart, this initial 50% retracement that I had, which was the start of the run up, sort of the more recent start of the run up, broke at 61.8. So I've really, and this is the futures contract, but I just went back to the low on the futures contract back in 2018 to high, and I'm not really too concerned with Bitcoin at this point. Most of you know that I've closed out most of my position on the first jump up that seemed abnormal, so around the 55,000 area, and then pushed most of the rest of my crypto that was in Bitcoin over to Ethereum, and I also have a little bit of Chainlink and a couple other ones as well. But long term thinking, within the next year, we likely see a Bitcoin trading up at 70 to 80,000. In the meantime, I don't know what the Colonial Pipeline, how that ransom was paid, but if they did pay it in Bitcoin, maybe you know, part of the hackers closing out the position could have facilitated some of the down move. I'm not really buying that Elon Musk not accepting Bitcoin um, was a huge catalyst. I mean, unless you were super naive, if you bought a Tesla, if you bought anything using Bitcoin, you still have to pay capital gains tax. So while it's a novel or it's a cute idea to accept Bitcoin or whatever currency that you want for your vehicles or for your products, you really can't bypass at least currently in the U.S., you can't really bypass that capital gains tax. So you'd be in the same boat whether you cashed out your Bitcoin and bought your car, or just bought it with Bitcoin and then paid the capital gains at the tax time. So um, that's all I'll really say on Bitcoin. At this point, I've taken enough out where it could all go to zero, and it wouldn't really matter too much. But hey, if it goes up from here, great. Again, asymmetrical risk, like we talk about a lot. Other than, let's see, the VIX, go over to that real quick. We're kind of, since the the double bottom, if you will, in the SPY, we've had sort of this lower high put in the VIX, and we're already back down under 20. Today we opened with a pretty strong breath actually, and then since then have traded down. Advanced decline line still pretty strong. Breath has slumped down to this, inside of 2 to 1. But what I wanted to highlight is the unfilled gaps for the week. Look at where we stopped on, was it Tuesday? The low. Let's see, yeah, Wednesday. Wednesday's low. We reversed right at the unfilled gap from the 13th, and then we opened here without a gap. Get rid of that. It has been filled. And then look at, let's see, oops, no, I need to turn that off. And I wanted to look at today. This one was unfilled. But look at today's price action. We sold off and traded, or we bounced first and reversed right around the 41.82, which was the close from the 10th that was unfilled. And we rolled over. That was right up here, went just a little bit higher, and then traded at the halfway back short and kept going down. And then we came down 41.53.50. The low was a little bit lower than that, but you get the idea of looking at those unfilled gaps, those prior closes for bounce points. And that was down here, and then that halfway back was like this. If you didn't take the first one, you could just take the second one. But the idea is that when we trade back to these unfilled gaps, these prior closes, those are great places to look for reversals. So we can get rid of that one, and the close from yesterday has been filled. So now, if we zoom out, you can see that we only have unfilled gaps below us, and barring some kind of gap up and go Monday that puts us into new highs, um, I think at some point here in the next week or two, we will see lower prices than we are currently at. Um, in part because if we look at the uptrend line on the ES, we still have a little ways to go. Like if we were to just move sideways to slightly down before we would tag up on that trend line, this double bottom here is close to the 50%. So that's why I say if Monday, if we gap up and go, then it'll be another FOMO, chase it up to 43.23. But I think there's enough people that have still been either like bought high and have been burned, and a lot of newer investors that, unless you bought last March, um, if you've bought recently, you're really not in super green territory. And so just a little move down can scare a lot of newer investors. So there's there's emotions on both sides of it, both the greed side and the fear side. So I wouldn't be surprised if we kind of continue this. If I draw a box around the last week, kind of continue this range bound price action. But if the VIX drops, I'll be watching the VIX, because if the VIX continues to drop, that's a sign that that fear is leaving the market. So I think we'll see some decent moves continue. There were a handful of trades this week or a handful of setups that didn't fill, but then another handful that were pretty nice, like today with these pulling back right to the 50% at those reversal points. So it's okay to not get filled every once in a while. Happens to me. Don't get frustrated and make bad decisions. Just you know see if there's another setup that follows, and if you can't get in, if the market's just screaming higher or lower, then it's okay to just say, okay, I'm not in that one. Let me look for the next opportunity. I'm not going to bother chasing it and try to, you know, jump on that bandwagon too late, and then you get that you're just trading with the rest of the FOMO newbies that end up getting burned. So stay safe out there. Focus on, as Warren Buffett would say, preserving that capital. Try to find those opportunities of asymmetrical risk. And an easy check for that is to say, okay, if I'm a brand new investor and I want to put on a position, or I'm looking to invest in a crypto or a startup or some sort of investment, are we closer? Here's the question. Are we closer to the recent high or the recent low? So if we go out like to the weekly chart, you say, okay, I've got $50,000 that I want to invest, or I'm thinking about buying a house in this neighborhood, or I'm thinking about buying into this new crypto. Are we closer to highs, or are we closer to lows on like a relative basis? Like this is a relatively pronounced low, um, and that's all the way down here at 2100 on the ES, whereas we're closer right now to 4100. Um, the risk is skewed to the downside, whereas back in March of last year, if we go out to the monthly chart, you say, okay, well, let's see, the most recent low before that in March was like back here. We'll call it 1800 on the ES. And you say, well, are we closer to this low, or are we closer to highs? Well, last March we were closer to this prior low, which makes it, skews your risk to the upside, where you have asymmetrical risk and a lot more could go right than could go wrong. So those are the kind of risks that I like to look for and like to jump in on. So I hope everyone has a great weekend, and I will talk to you all next week.